Welcome back to Investago TV's weekly review, your go-to source for global economic updates, market trends, and financial insights. Ready? Let's get started. A recent US Treasury report reveals that the federal government has accumulated $142 trillion in debts, liabilities, and unfunded obligations, equating to 93% of all American wealth. This staggering figure highlights the financial burden being passed on to future generations. The report includes obligations like federal employee pensions, environmental liabilities, and social insurance programs like Medicare and Social Security. Despite being a critical financial issue, mainstream media has largely ignored these findings. Excessive government debt can lead to negative outcomes such as lower wages, higher taxes, and weaker economic growth, putting future living standards at risk. The global economy is on the brink of collapse as 6 key growth drivers: China's industrialization growth, positive demographics, low interest rates, low debt levels, low inflation, and the tech productivity boom have all dissipated. China's once booming growth has slowed, and its model of overproduction has reached saturation, leading to economic stagnation. Rising interest rates, high debt, and inflation have exacerbated global economic fragility. Meanwhile, the anticipated AI-driven productivity boom may not materialize, leaving millions unemployed without new job opportunities. The hyper-centralized and over-leveraged global economy is now vulnerable to a deep recession, with no clear solution in sight. The commercial real estate sector is emerging as a potential catalyst for the next financial crisis, highlighted by the significant losses experienced by UBS Group. UBS purchased the Sports Illustrated building in Manhattan for $332 million in 2006, investing an additional $76 million in renovations. However, post-pandemic challenges, including falling occupancy and declining rents, forced UBS to sell the building for just $8.5 million, resulting in a $393.5 million loss. The broader CRE sector now faces falling property values, decreased demand due to remote work, and rising interest rates, exacerbating the risk at $1.2 trillion in CRE debt is set to mature over the next 2 years. This combination of factors could lead to significant financial instability as debt refinancing becomes increasingly difficult. The global economy is facing a potential crisis as China, once a key driver of global economy, struggles under the weight of massive debt and deflationary pressures. Unlike in 2008, China is unlikely to rescue the world economy this time due to its own financial constraints. Huang Yiping, a prominent Chinese central bank advisor, has called for radical measures, including direct cash injections to households and setting a firm inflation target of 2 to 3%. If China fails to stimulate its economy, the global repercussions could be severe, especially if the US enters a recession, potentially leading to an inflationary shockwave. We're signing off for today. Don't forget to stay updated and follow us on our social media. Keep up the great work and see you next time.